My name is Muhammad Lukman and I am a CEO in this role play.
I'm Mr. Ihsan Asham, so I will be playing a role investor in this role play.
Hi, I'm Mr. Shad and I will be the financial analyst in this role play.
Good morning everyone. Thank you for joining this meeting. I am Lukman, the CEO of the company of Fabios. Today, we will dive into a detailed analysis of Fabios' company financial position and explore the strategies for growth, Mr. Shad. Please provide a comprehensive overview of the financial ratio.
Thank you, sir. You're welcome to my presentation. So, good morning to everyone once again. So, without further ado, let's jump into the topic today, which is the comparison of Fabios' company's ratio for the year of 2020, 2021, and 2022. So, first and foremost, I will discuss the liquidity ratio. As you may observe, our company current ratio for the 2020 is 1.15. Our company current ratio is 3.06 times for the current year, compared to 2.59 times for the year of 2021. Here, we can see that over 3 years period, the company experienced a meteoric rise, indicating that it has more assets than liability, and it was able to meet its short-term obligation without difficulty. The FAST ratio, or the asset ratio, for the company of the year 2020 is 0.711 times in the year of 2021. It is expected to increase to 1.97 times, and by the year of 2022, it will increase to 2.37 times. Based on the given statement, the year of 2020 was the lowest of 3 years, resulting in the company inability to meet all its short-term obligation, but later able to generate more cash and more liquid and pay off its current liability multiple times over.
That's quite remarkable, Mr. Ishad. A strong liquidity position is crucial for financial stability and growth. It's encouraging to see Fabio steadily improving its current ratio over the years. Lukman, this demonstrates effective financial management with the company. What are your plans to leverage this strength for future growth?
Thank you, Is. We are pleased with our progress and optimistic about the future. To capitalize on our strong financial position, we are considering obtaining a loan to fund our expansion plan. Shafi, as our banker, we value your insight. What are your initial thoughts on providing financial support?
I apologize because I could not come physically, so I'm just going to attend it online. Good morning, everyone. Based on the financial analysis and the upward trend in liquidity ratios, Fabios shows promising growth potential. Granting a loan to support your financial project seems favorable. However, as a responsible bank, we would need to assess the loan terms and reevaluate the collateral you can provide to ensure a secure investment for both parties.
Alright, now let's move to the activity ratio. It appears that, on average, our organization requires a considerable amount of time to restore client credit. Daily sales inventory is average number of days, time, requirement for the company to convert its inventory into sales. In the year of 2020, it took 75 days. Comparatively, the company required 68 days in 2021 and 64 days in 2022. It indicates the effectiveness of a company's sales performance and inventory management. According to the statement for 2022, the total turnover of account receivable is declining over the 3 period, culminating in sober receivable collection. The 3-year ratio indicates an increase in both the turnover of fixed asset and total asset, utilizing fixed asset to generate sales, demonstrating the company efficiency. Aside from this, profitability ratio, this ratio measures the effectiveness of management. Due to decrease overall cost, the net profit margin in 2022 is outstanding. Due to the high cost, 2020, 2021, and are cheaper than 2022. Gross profit margin is lower in 2020 This implies that the high cost of sold item is a consequence of ineffective procuring method, low selling sales, and low prices. The operating profit for 2020, 2021, and 2022 are 15.36%, 20.86%, and 26.04%, respectively, due to the high COGS and operational expenses. The outlook for 2020 is dreadful. The return on asset ratio indicates that management can generate profit from the firm's investment as they grow over the 3-year period. Finally, take the return on equity into account. Consistent growth suggests that company capability to convert equity capital into profit is improving.
Efficient receivable management is crucial for maintaining cash flow. Luqman, it's important to consider strategy to streamline our credit collection procedure. Additionally, our daily sales inventory ratio has shown consistent improvement. It took us 75.24 days to convert inventory into sales in 2022, which is decreased to 68.32 days in 2021, and further to 64.73 days in 2022. This suggests better sales performance and effective inventory management within the company.
Thank you for the insight. Is and Shad, we acknowledge the importance of optimizing our receivable collection process for further enhancing inventory management. This improvement will contribute to overall operational efficiency and profitability. Speaking of profitability, Shad, could you elaborate on our company performance in this area?
Certainly, sir. Let's delve into the profitability ratio. The net profit margin is the key indicator of our company ability to generate profit. In 2020, our net profit margin was lower due to the higher costs associated with purchasing, selling prices, and overall expenses. However, we implement strategies to mitigate this issue, resulting in improved profitability by 2022. Our net profit margin had significantly increased, indicating effective cost control and enhanced profitability. In addition to this, there is a leverage ratio. As in common knowledge, a low debt is advantageous for an organization. A debt ratio between 20% and 50% is excellent. As shown in the graph, 2022 is performing better than 2021 and 2020, which are positioned below it. The following ratio is the equity ratio. This ratio demonstrates the company debt to equity ratio. In the year of 2022, the company appears effective at debt management. A minimal ratio benefits the corporation in 2020. The long-term debt to equity ratio was significantly higher than in 2022. It indicates the company is not expanding using debt financing. Lastly, the ratio of interest earning to earnings. My calculations indicate that 2022 is more significant than 2021 and 2022. Our company was able to meet its interest obligation because annual profit exceeds interest requirements. Since our company can now pay interest on time, our capacity to repay debt has increased.
I am impressed with the positivity trajectory of Fabio's profitability ratios. It indicates effective and financial management and an ability to generate returns. As an investor, these ratios demonstrate as potential for a fruitful investment. Luqman, could you provide more details on how the loan will utilize to support future
Certainly, Shafi. With the loan, we plan to strategically invest in upgrading our infrastructure, expanding our distribution network, and implementing new technologies to enhance operational efficiency. This initiative will result in increased sales, improved cost control, and ultimately higher profitability for the Fabios.
Luqman, I'm impressed by the proactive measures you are taking to drive profitability and growth. As an innovator, I see tremendous potential in your company financial performance and expansion plan.
Thank you, Is. We appreciate your confidence in Fabios. Our goal is to create a mutual beneficial partnership and ensure a successful outcome for all stakeholders involved. Thank you for your positive feedback, Is. We understand the importance of securing favorable financing rates to support our growth plan. To ensure that, we have been working diligently to strengthen our relationship with financial institutions and demonstrate our company financial stability and potential for profitability. Through transparent communication and sharing our detailed financial analysis, we aim to attract favorable terms and conditions for the loan.
Your efforts in building a strong relationship with our bank, your commitment to financial transparency and demonstrated improvement in Fabios' financial ratios are factors that will positively influence the loan evaluation process. As a banker, I will advocate for competitive rates and favorable terms for the loan, taking into account the company's financial position and growth prospect.
Thank you, Shafi. We value the partnership we have with your bank, and we trust that our shared commitment to success will lead to mutually beneficial outcome. In addition to attracting favorable financing rate, we are also open to exploring other options, such as potential partnership or collaboration that can further enhance our growth trajectory. We believe in leveraging our strength and expanding our network to maximize opportunities for both Fabios and our partner.
Building on Mr. Luqman's point, it's worth highlighting the potential for strategic alliances or collaboration with complementary businesses in the industry. By the leverage synergies and sharing resources, Fabios can tap into new market, access new customer segments, and drive overall growth. Such partnership can also contribute to improving our financial ratios and profitability.
That's an excellent suggestion, Shad. Exploring strategic partnership can indeed provide valuable opportunities for expansion and market diversification. Luqman, I believe it's worth considering such collaboration and to accelerate Fabio growth and create additional value for stakeholders.
I appreciate your insight, Shad and Is. Strategic partnerships are definitely on our radar, and we will actively explore potential collaboration to fuel our growth. As we move forward, we will continue to focus on financial prudence, operational excellence, and innovation to solidify our position in the market and create sustainable long-term value for our stakeholders.
Your dedication to strategic growth and value creation, Luqman, Fabio's commitment to financial prudence coupled with its potential for profitability makes it an attractive prospect for financial institutions. Rest assured, we will work closely with you to secure the financing required to support your expansion plans at favorable rates and terms.
Thank you, Shafi. We appreciate your support and collaboration. Together, we will navigate the financing process and seize the opportunities that lie ahead. I am confident that with our collective effort, Fabios will achieve its growth objective and deliver exceptional results for all stakeholders involved.